All right, let's kick it off with some stocks that are in the news this morning. Our entire research team is joining in. First up, Grasim is in focus. Nigel, how did it look?
Well, the Grasim, we look at the standalone numbers, are pretty much in line. You know, on the top line, they came in at around 6,400 crores approximately. The EBITDA number came in at close to around 520 crores with margins of around 8.2%. So that was a little bit higher on a year-on-year basis and a little bit lower on a sequential basis, but that's par for the course. The EBIT margins is what we look at on a segmental basis. And the VSF business, well, the margins look much better on a year-on-year basis. So on a sequential basis, they came down a tad bit. And the chemicals business, well, that looked quite good on a quarter-to-quarter basis. There was some improvement out there. So those are pretty much in line. The problem with the margins and why there was some compression on a quarter-to-quarter basis is because of the others, headline, which in fact houses the paints business, which is now going to get commissioned. So these numbers looked in line. They've given their outlook in terms of capex as well, and they're saying that commercial production is very soon with regard to the paints division. So I think I'll go with mild green out there.
Okay, mild green on Grasim, but the good set of numbers came in from LIC, and that, of course, stock has been on a tear. Yash is joining in to give us the latest on that. Yash, morning.
Well, morning, Sonia. It's literally LIC singing Apna Time Aayega through its third quarter results. Super set of numbers. As far as, AP, VNB and VNB margin is concerned, all three progressed on a year-on-year basis. And they beat the street estimates, which were already very aggressive. So AP grew by about 7% on a year-on-year basis. It came in at about 13,163 crore rupees. The street estimated 13,056 crore rupees. Value of new business margin, that expanded by about 46% on a year-on-year basis, came at about 2634 crore rupees. The street was estimating just about 1879 crore rupees. Value of new business margin, that expanded very strongly. That was up by about 541 basis points in the quarter, came at about 20.01% versus 14.6%, the street estimating 15.7% out of LIC. With that, LIC has become the first insurer to actually see margin expansion in the third quarter.
Okay, so LIC has been, of course, a big mover, and we'll watch that this morning as well. Yash, thanks very much for that. Biocon is the next one we were focused on. Ekta has got details here. Ekta, morning.
Thanks for that. Well, the numbers came out post-markets yesterday, and it didn't look too bad. It was largely in line. So revenue was up around 34%. Street was anticipating 26% growth. Margins were in line. So margins came in at 23% in line with estimates. Profit was better than estimates. Now, the biosimilar business was integrated in for most geographies this quarter. So it was expected to be a good quarter. So the biosimilars business was up 65% year on year. Generics was weak. So it was down 7% year on year. And they've also prepaid $200 million towards debt reduction. So all of these parameters, while they did look good for the company, the CFO has resigned. They have indicated to move on and for personal reasons, and there was also resignation from the global head of commercial APIs. So maybe that's probably going to weigh on the stock more vis-a-vis the earnings. They do have a call at 9 a.m. today, so I think more details then.
Okay, thanks a lot for that. Well, it's Friday, so can't not talk about United Breweries. Mangalam is here to tell us how that one looked. Mangalam, over to you.
Well, let's talk beers then. Decent numbers coming in from United Breweries. I call them decent because, there's gradual improvement. Not the best, but there are signs of improvement. 13% growth in the company's revenue. EBITDA, of course, jumps 89% on a very, very low base. Gross margins have improved to 44%. This compares with 42%. And as a result of which, the company's posted net profits of 86 crores. So volumes for the quarter up 8%. So if you look at the trend, there has been sequential improvement over the last few quarters. That's a positive. The premium end is doing well. 14% volume growth out there as well. Just a few things we need to watch out for. Quarter on quarter, EBITDA is down around 200 basis points. So let's see whether they go back to the double-digit margins as well. Fourth quarter is seasonally strong, so that would give an aided push. And finally, they have an important change in the leadership as well. Anand Kripalu, who was the ex-leader at United Spirits, has actually joined as the chairman of the board. So all these factors, I expect the stock to be in mild green today.
Okay, all right, Mangalam, thanks a lot for that. Well, let's go across to Vivek. He's here to tell us about Torrent Power and RVNL. Vivek?
Well, good morning. That's right. So slightly subdued quarter as far as Torrent Power is concerned. Now, it's been a muted Q3 miss against expectations, and on a year-on-year basis, optically, numbers do look quite weak. However, what we have to keep in mind is that the base quarter actually saw two gains. Number one, LNG trading gains had come in last time, and also merchant power prices last time around was a lot better. So the company says that a 543 crore EBITDA is what the excess contribution was last year. This time around, what's actually worked for the company, higher capacity as far as the additions were concerned, and along with that, higher wind PLF is something that aided the company. Revenues down a little over 1%, EBITDA down almost 28%, and margins too on a year-on-year basis has contracted quite significantly. Profitability on the back of that is down 46%. Sudhir Mehta has decided to move on, from the director of the company. He will continue as the chairman emeritus. The next stock on the radar is RVNL. Now, RVNL, like we've been maintaining, the margin erosion continues, slightly weak execution, so I expect the stock to be in the red today. Revenues down 6.5%, EBITDA down almost 10% on a year-on-year basis. Margins 5.3% this quarter, on a year-on-year basis, 5.5%. And when you're comparing it to last quarter, 6.1%. So, the margin erosion story continues, so I expect some softness as far as RVNL is concerned.
All right, Vivek, thanks very much for that. So RVNL in focus now. Global health is the next one. Ekta is here with details. Ekta, morning. Morning again, I should say. Sorry.
Thanks for that. Well, popularly known as popularly known as Medanta. Revenue up around 20-odd%. Margins have expanded 25% versus 23%, and the profit has grown handsomely as well. Occupancy has risen on a year-on-year basis, 64% versus 59%, and the average revenue per occupied bed is up 4% on a year-on-year basis as well. And the international patient revenue is up around 6% on a year-on-year basis. Expect the stock to probably be in the green today.
Okay, all right. Thanks a lot for that, Ekta. Well, I'm tracking two cement companies. So let's start off with the bigger one first. That's Ramco Cements. I think the stock could start off a little bit in the red, because if you look at it, the street as well was positioned for these numbers to be a little bit weakish. The problem was on the volumes front itself, there was a small miss. That's what led to a revenue miss. And the EBITDA number as well did come in a little bit lower. So it's a top-down miss. Remember, in the past quarter, you had some unseasonal rains that impacted them. And demand in East India as well has been a little bit subdued. The EBITDA per ton for them did come in at close to around 1,000 rupees approximately. Now, we're looking at it. The other point that came out with regard to Ramco's numbers is that they also announced new capacity addition. The estimated cost is around 1,250 crores odd. So that's another stock, another data point that we'll be tracking. So I think weakish numbers with some capacity addition, more capex and debt as well, close to around 5,000 crores. Expect the stock to be under some pressure, but interesting to see what happens from there. JK Lakshmi Cement, the numbers look quite good. There was some mild growth on the top line, 2% growth on volumes, but the EBITDA number looked quite good, and the margins did expand to around 16% approximately. The company has gone ahead and they've announced a capacity expansion as well from around 14 million tons. In the next few years, they're saying they're going to be going to 30 million tons. So because of that, they've added both the announced clinker as well as cement capacity addition. Expect the stock to open up in the green.
All right. Well, let's also talk about Aarti Industries and how that one could shape up. Sonal is here to give us a lowdown. Sonal, over to you.
Good morning, Sonia. Well, it was another quarter of sequential growth that the company saw. YOY, it was a decline as we are seeing across the chemical space. So YOY revenues are up 4%, but EBITDA is down 7%. Margins have declined 200 basis points and profits are down 9.5%. But what the street could like is there is a sequential growth, and a good one at that, because revenues are up 20%, EBITDA is up 15% on a sequential basis, and profits are up 36%. On the back of that, there could be some green, but we are, of course, awaiting management commentary as well.
All right. Well, here's a quick recap of our top stocks with positive news flow. There's Grasim, LIC, United Breweries, Global Health, JK Lakshmi Cement and Aarti Industries. While stocks with negative news flow, there's Biocon, Torrent Power, RVNL and Ramco Cements.